Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how the market is feeling bad vibrations, and how it's looking really more at sentiment than the actual data. Plus, ask the question, does history repeat itself? And have a look at, see how Musk is getting really desperate. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, indeed. I want to ask the question, is the market feeling bad vibrations? You know, because the market is sort of going through a bit of, well, not a bit of, a lot of fear of economic slowdown and unknown, I'll stress this, unknown tariff inflation. And in many ways, this has been one of the reasons, not the only reason, but one of the reasons which is driving the market into actual panic. Now, the question is, of course, the question we need to ask, is it actual economic data driving this? And we're going to talk about that. Or is it just the mood and the vibe, so to speak, in the market? That's the big question. Because at the end of the day, fear can also be a distraction. This is what Powell had to say recently when asked a similar sort of question. He said this: the relationship between survey data and actual economic data hasn't been very tight. There are plenty of times where people are saying downbeat things, and yet they go out and buy a car. He has a point. He has a point on this, because if you look at one of the shocking things, what's really scared the market was consumer sentiment, which is a survey, obviously. Okay. And that sinks to the lowest level in more than 2 years. And like I said, we don't know that will be the case with this thing, with the tariff fear and the trade war fear. And he did also go on to say, we are absolutely obviously we're aware of the softening sentiment data and high uncertainty. And like I say, his job was the Fed's job in many ways to try and manage the vibes. Now, we all said, like I said, we just seen that survey data has been negative. It wasn't just the consumer sentiment. Don't forget Bank of America. They did a survey of many fund managers as well. And they were all very pessimistic. 55% of them believed that, this trade war is going to bring a recession on the United States. But here's the thing. Let's look at the actual data itself, though. Because the actual data is still pretty positive. This was the point he made the other day in his press conference. I mean, the job market is still pretty strong. We had a reasonable NFP number. Unemployment is still currently low, and it's projected to stay low, even though the Fed has downgraded US GDP. Don't forget, they downgraded it to 1.7% growth instead of 2.1% growth previously. And don't forget, yesterday's initial claims came in at 223,000. So still 223,000 people signing on for unemployment benefit for the first time, but still that's not that, it's not that massive increase. And often, don't forget, I often say on my little show, I often say that, you always keep an eye on the US initial claims, because that's often in many ways an early warning indicator. But here's something else what the market is also thinking about, which is also giving it bad vibes. And initially, the market didn't pick up on this or didn't think about it when he said it on Wednesday. But now, what usually happens, it takes the market a little while to dissect and digest what is said in these press conferences and these reports, what it means. It takes them a little while. Like it takes everybody. It takes a little while to work out what is meant by it and what is, what they're actually saying. But he says there, he said this a particular word, which has got the market a little bit. It's got the market in a little bit of shaky ground, so to speak. And he said, transistory, what's it called? Transistoral. I can't say it now. He said that word. I said it earlier on. I did another video where I could say it perfectly, but now I'm getting my tongue tied. And here's the thing. He said that in reference to when he was asked questions about Trump's tariffs will affect prices. And he said, yes, it will be, but it would be transistory. Yes, that's it, roughly. Meaning, yeah, but it will ease on. And I know it's just a word now, apparently I cannot say, which is just amazing. Talk about timing. But here's the thing. This is what the market is worried about. Okay, I'm beginning to, again, this is what's shaking the market a little bit. During COVID-19, Powell was asked a similar question and its effect on inflation. And guess what word he used? Yes, he used that word. And because of that, that was the reason he felt the Fed did not need to raise interest rates. Did not need to raise interest rates. However, that was a big mistake because come 2022, the Fed, because of no action, because of that word, because that's how he felt, come 2022, the Fed was fighting inflation at a 4-decade high and had to aggressively hike rates at a rate not seen since 1970s. So yes, the word transitory, I can say it now, is scaring the market a little bit because they're asking the question. They're asking the question, is history going to repeat itself? Because the word transitory, he said, I can say it now, fine. Because of that word and what he said previously, they're generally getting a bit worried that the Fed is not seeing the real danger with his tariffs. The real danger. So yeah, in general, the market is getting bad vibes. Let's have a quick look at the market, see where it is as it stands at the moment. So let's start off with the S&P. Okay, like I say, we opened again with a gap lower, currently trading at 5,614 points. Again, feeling bad vibes. On the day itself, though, let's have a look. Again, yeah, it is slightly negative. However, there is sort of the anticipation or hope that maybe, just maybe, this might have be the 5th week of gains, which is looking unlikely at the moment, as it currently stands. Don't forget the market's only been open for, say, 45 minutes. But if it carries on with these bad vibes, that'd be 1, 2, 3, 4, 5 weeks of losses. If you look at the Nasdaq, Nasdaq is looking the same. At the beginning of the European session and the pre-market, there was hope that they could end this losing streak. Because we've already seen 4 weeks of losses, and now looks set because of the bad vibes. It looks set it could actually have a 5th week of losses, and the same can be said, of course, for the Dow Jones, which is doing slightly better than the S&P and the Nasdaq. On the day, again, it is negative on the day, though. If we have a quick look at, say, the Mag 7 quickly. Tesla, okay, slightly up, but not very positive. But I want to talk about Tesla again a bit more in a minute. Meta, go 30 minutes, up slightly, 0.26%. Microsoft, negative 0.55%, etc. So yeah, again, it is very tepid. It's very much, again, still bad vibes, very bad vibes. I'm going to talk about another story, and then I'll go back to Tesla because I want to talk about that. It's a Tesla story, believe it or not. So I gave it away already, didn't I? Elon Musk is trying to reassure Tesla employees everything is going to be okay. Everything is all right. Okay? In fact, he basically said in his words, well, in a minute, he's saying he's obviously trying to reinsure the market because obviously Tesla has not had a good 2025 at all. And they say their stock value has fallen by nearly 50% so far this year. So you can see why. He's trying to reassure his employees. And he had said this. He said, if you read the news, it feels like Armageddon, which I can understand because they had a very turbulent couple of months, very rough couple of months, very much a very rough couple of months. So I can understand why he's trying to reassure people. But really, what really he's doing, and what he really said, what he's really trying to do, is saying, don't sell your Tesla stock. Hang on to it. And this is literally what he said. What I'm saying is, hang on to your stock. So, Tesla is is under pressure a lot. In fact, I will be doing a webinar on this next week when we'll talk about that. Look at the fundamentals behind stocks and things as well, like a case study. But yeah, like I say, he's under a lot of pressure along with the company, because don't forget, you've got people protesting at showrooms, people burning their cars, Tesla cars. So you have, I don't condone violence one little bit. Peaceful protest is fine, but violence is not condonable no matter what. And you've got, current Tesla owners giving up their cars. So then no wonder there is under a lot of pressure. And like I said, they've had a very, very, very bad year so far in 2025. I mean, let's have a look. I know we've had a quick look at them already, but I want to have a look at them again. And we can see how bad it's been. That was obviously the height of Trump mania. Now look at it since then. But if we have a look on a weekly as well, we are looking at 1, 2, 3, 4, 5, 6, 7 weeks of losses. 7 weeks of losses. And as we already said, it's already down close to losing for the year 50%. And if you have a look, I'm going to pull it up for a quick second just to have a look at it. Let's have a look at where are their financials. Not that one I want to look at. I want to look at their financials. Let's have a look at their financials. Here we go. That's what I want to look at. Okay. Now, don't forget, again, this is what is obviously worrying him and worrying Tesla in general. Okay. Don't forget, they were just a few months ago part of the $1 trillion club, or the $1 trillion club. Look at their market cap now, 764 billion. That's a massive drop in such a short space of time. I mean, it's still worth 764 billion market cap, but still, that is a huge, huge drop in a very short space of time. So you can see why the market is obviously getting a bit worried, or why Musk is telling his employees, don't sell your stock, keep it. Anyway, there's something else I want to go on before I want to go have a look at the currencies and, of course, gold. There's something else which is on the market's mind, which is preying on the market, which the market is fearful and worried about, obviously, and that is Liberation Day. That's on the horizon. For those of you who don't know what Liberation Day is, basically, it's April the 2nd, and Trump will reveal more tariffs. This is what he actually said. April the 2nd is Liberation Day in America. For decades, we have been ripped off and abused by every nation in the world. Now it's finally time for the good old USA to get some money and respect back. So he's really building up, or hyping up, April the 2nd, Liberation Day for America. So the market is obviously thinking what we're going to get now, what these tariffs are going to be like, how much more stress and panic is it going to cause the market? So that's coming up very soon. And expect to hear a little bit more about that as he hyped up April the 2nd. Anyway, I want a quick look again at maybe some other things. Let's a quick look at currencies as well, because we have seen, because the market is getting jittery again, these bad vibes. We are seeing a little bit of dollar strength. Like I say, obviously for the day, the euro dollar is a bit under pressure. We've seen a bit of dollar strength on the euro dollar. To be fair, the reason for that as well, there was an awful lot out of the EU summit yesterday when they're talking about defense. There wasn't a lot of extra stuff coming out for it, which also has put a bit of a damper on it, but it's mainly dollar strength. British pound, again, is currently being under pressure throughout the session. Again, just stronger US dollar because of the markets getting spooked. Dollar yen is, obviously, we've seen stronger dollar today. So yeah, again, it's dollar strength across the board. Gold. Of course, we're going to talk about gold. We've had a bit of a big sell-off, a bit of profit. I've definitely no doubt about profit taking, from all the highs. We're currently trading now at the moment, as we speak, $3,008, still, above the $3,000 level, which wasn't there just over a week ago. And for the day, again, this is mainly down to dollar strength. Yeah, it's going to be one of the days of losses. But, for 1, 2, 3, 4, we've hit higher highs. And we're still just above that trend line as well, which could potentially be a key area of interest. But like I say, yeah, we are seeing dollar strength, which is, causing a bit of a profit taking on the yellow metal. Anyway, don't forget, this, of course, is a live show, so you can ask me anytime you want any questions, or simply say hello, or share with me your opinions. Let me know what you think. If you found it funny, but I couldn't say transitory earlier on, I got struggled with that word. Always happens. Anyway, if there is no questions, don't forget, if you're watching me on YouTube, and don't forget, if you're watching the recording, because quite a few people I've noticed go back and watch the recording, don't always watch the live shows. They go and watch the recording, and they watch it then. So don't forget, you always have the option, if you're watching the recording, excuse me, you can ask a question or put in your view in the comments below, both on YouTube or Twitter, because it's broadcasted on both. And I will see them and I will reply to them next time I go live on air, which of course will be Monday, because I go live on air every day. As well as that, if you're watching me on YouTube, subscribe if you like. Hit the notification button so you know next time we're going live. If you like this type of content and you can put up with me, by all means, give me one of these. It's nice to know that you like what I do. And if you're on Twitter and you like this sort of thing, by all means, give us a follow or give us, I think it's a heart, isn't it? Heart on Twitter, not a thumbs up. Anyway, till next time, as there's no questions, till next time, which will be Monday. Oh, actually, no, before we go, there's something else I want to quickly talk about. Just remembered. Next week, we've got a really big week, which is why you should definitely come, join me. We have, obviously, US global manufacturing PMI, consumer confidence, which has really scared the market, US new home sales, US CPI, US durable goods, US GDP, UK GDP, and US GDP. So we do indeed have a very big week ahead of us. So come and join me next week, because it's going to be potentially a real barn blazer, a real barn burner. So come and join me for that, especially US GDP and US consumer confidence. Again, this is really what we talked about in this video today, where it's sentiment surveys compared to actual data. So anyway, come and join me for next week, because next week is going to be a really, really big week. Anyway, as there is no questions, I've remembered everything now. As there is no questions, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.